Welcome to the TradeTrust podcast series. Today we have a very special guest with us. He's none other than Dr. Tom James, who is one of the co-founder of TradeFlow Capital. Tom, really welcome and happy that you can join us today.
Thank you for inviting me.
Today, we will focus our discussion on fintech-powered fund management, with special focus on how platforms like TradeFlow Capital actually helps our SMEs get access to trade financing. Tom, thanks for being here today.
Thank
really
you very much.
appreciate it.
It's exciting to be here today.
This morning, we had some small talk, and one of the key takeaways that I got was that it's very difficult to explain what TradeFlow Capital is rather than what TradeFlow Capital does. So perhaps you would like to share with the audience how you come to do what you are doing today.
Okay, thank you very much. Yes, it's sometimes what we do is is quite simple. How we do it is complicated. So back in 2016, me and my co-founder John Collis, we looked at the problem. Our backgrounds are in commodity trading and investment. I've been in the markets now for 35 years, seen a lot of ups and downs. I was even here in Singapore with the Asian crisis, and then we had the GFC and everything like that. So really looking at the problem that has really escalated since 2008 with this trade finance gap, but then looking at the SME focus, where we've seen, because of the smaller size of import-export commodity trades, it's not profitable for a lot of the traditional lenders to sort of get involved there. It's the cost of regulation, the cost of KYC, AML checking, everything else. If you're using legacy systems, if you're not digitized, the cost is very high. So we looked at all the problems of why lenders couldn't lend money to the SMEs, why the SMEs couldn't borrow money to move goods, the lifeblood of economy, moving stuff around the world, right? Trade. And the biggest issue seemed to be data and the transparency, to reduce the cost of being able to make a good decision to support the SME. And so that answer then brought us to the fact that a 2-year journey from 2016 to 2018 to look at technologies, what was available to digitize the supply chain, to be able to capture the data from the suppliers right through to the end buyers. Can we do that? And it took a couple of years. It was very tough then. I think it's much easier now, and we'll be talking about that, I guess, as to how digitalization has evolved so fast. So we looked at that. We felt comfortable, and in 2018 there was enough digital technology there for us to, as a fund manager, to then go out and help SMEs. So we set up some funds. We got investors here in Asia, now in Europe as well, to put money into this, as we call it, asset class, or real world assets, trade assets. And so with that money, we're able to invest directly in the transactions. So for a lot of these SMEs all over the world, here in Singapore as well, there may not be enough history for the track record, or the trades, their balance sheets are too small, so it's difficult to lend money. But you can help to finance the trade. So that's what we focused in on.
So if I hear you, you touch on two main areas. One is the lack of data. The other one is because of the lack of data, then typically the small traders or the small manufacturer or exporter, it's very difficult for them to get financing. Right? And this is exactly the problem that you're trying to solve. So let's just look at the lack of data first. Right? Actually, the problem of the lack of data has been around in the industry for decades. Since the invention of the computer networks, right, company has been establishing EDI networks to exchange data. Maybe at that point of time, those organizations are more looking at how can I efficiently or effectively orchestrate my supply chain, especially in the high-tech manufacturing sector. They use lots of it. But 30 years down the road today, we are still talking about the same problem. Why do you think the problem still exists? Although the entire market has been working on this same problem for the past 30 years.
I think from our perspective, our experience has been, we started at a good time where the cost of technology started coming down a lot as well. And so to give transparency to supply chains, you also want to be able to track the commodities. You want to track the cargoes. And so working with actually Singapore companies, in 2018, we had enough technology to deploy in the field to actually track, both offer as an electronic custom seals on containers, but also to track the commodity and the quality and the temperature of that commodity during transit as well. That wouldn't have been possible perhaps 10 years earlier. The technology was around, but it would just been too costly to do that. So I think there's been a couple of driving forces which have really helped the direction of travel since 2018. The cost of the technology, AI, artificial intelligence, the cost of AI, the cost of processing power in the cloud keeps coming down and down and down. And if it wasn't for those technologies and the cost coming down, we wouldn't be able to do what we're doing in terms of digitizing our supply chains and knowing where things are and that they're on track and they're being delivered, etc. So, we're in the right time at the right place for digitization because every container, so just one 20-foot container, is still going to have a couple of hundred documents around that. And if it's a food product for human consumption, even more,
That's right.
certificates of health and quality, etc. So if it wasn't for the AI, which we've been able to adopt to read that information, because still a lot of people's idea of digitization is creating a PDF file. So you get a lot of digital data, but it comes in still a document. And so we've had to train and build models and systems to extract the data we need in order to have the transparency to make quick decisions. So I think digitization is helping traditional lenders in the trade finance space because the cost of extracting the data and having the transparency and being able to make timely decisions, that's the key thing. Because cargoes move. You can't sit on it for 3 months making a decision. The ship has already sailed and disappeared and gone. So I think the digitization allows us to bring down the cost of making accurate, timely decisions. That's a very, very key thing.
So you also touched on a point about transparency, right? I've been thinking about this for quite a while, and just imagine I'm a trader, right? I buy from you, and I sell to him. Actually, it's my natural tendency not to be transparent because I make money or I arbitrage based on the lack of information between you and him. So by making my trade transaction transparent, I'm worried. So how do we actually solve this problem and address the traders' need to somewhat maintain confidential in his trade, as in those information relating to how he make money versus making the information relates to how he get financing transparent. So how do we deal with these two somewhat competing needs?
I mean, obviously, me and my team were living and breathing this every day, right? And in terms of Where things tend to fail, unfortunately, it's usually where humans get involved and bits of paper. Things just, it's just statistics. Eventually, somewhere something may go wrong or get lost. So traders will typically switch bills of lading, switch documents in order to, to obviously to obfuscate and hide maybe their margins from suppliers and things like this. It's just a normal course of business. In the paper side of things, switching all of that, you've got couriers involved, there's bits of paper flying all over in different directions, and it takes time and is costly as well. So my argument actually is that it's easier and more secure to be able to switch documents and change that electronically in a secure fashion and quickly. And not end up with certain, old documents bundled with the new documents, and then everyone finds out what's happening in the supply chain as well.
Actually, you also brought out an interesting point. For so many years, we have been trying to digitalize trade, and we know that there are tons of documents, right? From our point of view, when we started our project, we find that the document or title is the last remaining piece of paper that is notoriously difficult to digitize. Because it's a title document, it needs to be original on the paper, and it needs to maintain that whoever bears or come into possession that piece of paper is able to claim the obligation that is associated with this piece of paper, right? And that is also one of the main reasons why Singapore have updated our Electronic Transaction Act 2 years ago. Now we are 2 years down the road, and the way we see it, the industry is still very slow in using that piece of legislation. So in your view, why do you think the industry is still slow? And of course, last year we saw UK change their law, and G7, even G20 came out and say that they will be looking seriously in updating their law to align to this piece of legislation. What are your views?
Well, I think our experience, certainly feedback we've had from some counterparties, is that running parallel systems. Okay, we've still got some things on bits of paper. So certificates of origin is becoming digitized, but still some countries will issue bits of paper. Phytosanitary for food products getting digitized. So I think some of the hesitancy perhaps has been around, well, I have to run like a digital system just for the BLs, but I've still got all these other bits of paper still flying around. So it's kind of, I think for a lot of people, it's kind of like, it really needs to be all or nothing type of approach. But we actually, we'll, as long as certificates of origin, paper documents like that, they can go directly to the destination. As long as we have copies of that, that's fine. The EBL is the control document, so we want that to be an EBL. So that really doesn't really, we're happy running that kind of parallel. And obviously things are becoming more and more digitized, so that's helping in terms of getting the provenance of that. I think obviously the key thing is the bill of lading is genuine and you can test the provenance of that. But obviously then you want to be able to, as things become digitized, also just automatically confirm other certificates.
Just to clarify my understanding, right? I know you don't like PDFs, right? So typically in a trade transaction, you have one control document, which is typically the document title like BL. But you have got the other supporting document that you mentioned, so origin, phytosanitary. So because of the fragmentation of how these certificates are being digitalized today, is it okay to actually, even if I manage to get this certificate in PDF today, being able to actually be financed by your platform?
I think PDFs are a good start, and I think we have to accept that bits of paper will still be flying around for quite a few years, because it takes different countries are at different speeds.
When you say bits of paper, do you also refer to PDF or
PDFs.
Is really the physical bits of paper?
Absolutely right. So yeah, PDFs are still going to be around for some time.
Right.
as people adopt and also as countries accept the sort of electronic trade documents acts and stuff like that. Certainly, I think we've, with the bills of lading as well, when we look at where there has been problems of fraud and other issues, it's really about trying to reduce how many people are in the chain of all of that documentation. So either, even just human error is more prevalent than fraud. You just want to reduce how many people are having to push and forward documents around. In October 2023, we did our first digitizing with IMDA TradeTrust of a paper bill of lading. Yeah. So in this case, it wasn't possible to use an EBL. So in this case, we had the bill of lading handed directly to a custody agent in Singapore, who then said, I've got this, right? And we're then able to digitize and even then tokenize that bill of lading, put it on the chain, and we refinanced some of that cargo. But the fact is that we're able to have a trusting third party holding the bill of lading, out of our reach as well. So whoever has that token could go back to the custody agent and say, I want the bit of paper.
So to be precise, you are actually tokenizing the trade transaction, not so much tokenizing the BL per se. Am I correct?
Yeah, in that first instance, we did the trade transaction, including the bill of lading. Yes. So, and this is also an interesting point that particularly if it's a containerized bill of lading, there'll be many different containers, and there may be even different products in those containers. By digitizing through TradeTrust the bill of lading, we were actually able to isolate each individual container and tokenize those. So we didn't actually refinance the whole bill of lading. We actually selected particular containers for refinancing.
Oh.
And so people could have rights over those particular cargoes. So that fractionalization of even the BL contents, again, if you make things smaller, it's easier to digest. So also it opens up the opportunity for easier liquidity and financing.
So maybe, okay, for that trial that we did last year, you start with a paper BL, right? We know that. But I'm just curious, what it means for you if sometime in the future, all the BLs are digital. What will it mean for a fintech platform?
Well, I think this also comes down to the adoption and the driver for SMEs or even large firms to adopt digitization. Is reducing the cost of transaction, and more importantly, reducing the speed of decision making for refinancing or even getting financing for a particular transaction. So with the paper BL, we'd have to go and do checks. Is it authentic, etc. And we're reliant upon, is it a holiday in the other country? Is the shipping operator sick or ill, or will they reply overnight or in a few days? Yeah, so that's out of our control. But if it's a digital EBL, it's instantaneous. We can authenticate that this is real. Who's holding it? Are we holding it? Where does it come from? And also even then the transfer of the cargo is very, very fast. And I think in certain countries, because as you mentioned, some countries are still working on adopting the electronic trade records laws, most of the EBL providers also allow you at the destination, the local shipping agent can still then, you can switch it back to a piece of paper. If customs or someone still needs a bit of paper to put lots of chops on, that's still possible. So there's no excuse not to be able to use the EBL during all the shipment and transit.
Okay, then recently I've been discussing about the benefit of digitalizing this BL within the context of a traditional trade finance or documented trade transaction. So this guy was very interesting. He's the importer, right? And he was explaining to us, look, today I only pay after I see the paper. But with E, it comes instantaneously. Hey, I lost this window to delay my payment. Is there any way that we can help this guy?
Yeah, it's interesting because I have heard that argument before. It's
Yeah.
like, economy, you're speeding things up, now we've got to pay faster.
Yeah.
So I think that's where, you have different firms who are doing financing at different stages, right?
Yeah.
And so, TradeFlow, we're at the sort of the front end where we're helping the trade be initiated, so that the initial import or export transaction. And then if the end buyers want to have terms, then there are other companies that do like invoice receivable financing and stuff like that. And all of them as well, for them it's a volume business, and they want to have everything digitized as well. So if they can see the provenance of data flow, they can see how the cargo has moved, everything, then that also helps. I think one of the other things we're just starting to see is globally investors, also the bigger trading firms initially, getting hit by reporting requirements on carbon emissions footprint and stuff like this. In Europe, they call it Scope 3, that'd be Scope 4, but where through the accounting records of your company, you're having to demonstrate your touch points in the real world and what's your sort of carbon footprint, and then eventually what are you doing to help reduce it. And within the digital chain of data on trade finance, we can start to include that metadata, that information about where it's come from, and be able to prove that, okay, this was the carbon footprint for that particular container. And then people can even potentially offset that accurately as well, but at least they can do the reporting. But also starting to see investors getting picky, where they want to put their money, whether it's on the invoice receivables or even putting money into our own funds, which finance SMEs.
Yeah, the ESG or green reporting is a very interesting angle. So do you see this coming from your investors saying that they are more and more concerned about sustainability, and they would like to sort of like distinguish between a greener trade versus a non-greener trade? Are you seeing this trend among your investors?
Definitely. In fact, just in March this year, 2024, we had AIMA, which is the Alternative Investment Managers Association, sort of Asia big conference. And there's TradeTrust, there's a lot of other groups which are very focused, impact, ESG investors, and a lot of very interesting discussions. And I think the key message was, certainly to the fund management community, is that even if you're not trying to run a green fund, you're still going to have to be able to report the data because your investors need it. And I think then also it's fair to say, even 2-3 years ago, ESG was a filter. It was a benefit as a fund manager to get investors. Now it's becoming a kind of like a must-have. If you don't have it, then in fact we're not even starting the conversation around investing in your funds. So we're taking it very, very seriously. And I think certainly we can see this even from banks and lending, a lot of the banks allocating funds for green finance specifically. And so even we look at the big commodity traders, the miners, even the energy industry, they're having to collect a lot of more information because they're having to disclose a lot more information for shareholders and investors to make those decisions. So digitization is the only way to do that. Otherwise, you're going to have a massive increase in costs.
So just pardon me for asking a super blunt question, right? The regulated financial institution, which we know many countries around the world, they are passing legislation to actually require this sustainability reporting, right? And especially apply to regulated institutions. So I just put myself in the shoe of a private investor. Why do I care? Why do I care? Do you have any sense?
Well, I'm sure, different investors and particularly individuals have different motivations around, be it climate change, or maybe they're experiencing weather issues or other problems in their own country, or it might even be around energy security and trying to switch to renewables, etc. We're already starting to see now shipping industry. They're also, if any shipments going to Europe, in or out of Europe now, must also buy carbon emissions credits as well. So if you don't have the data on your shipments, you're just going to get you're going to get charged the maximum, right? Unless you can actually prove where things have come from or where it's going to, etc. So there is a cost to carbon, and so it has to be accounted for and measured properly. Otherwise, you just get charged the maximum.
I think this
So I
is
think,
a very interesting angle because whether we like it or not, whether we care or not, sustainability and ESG has been a big problem, and it will remain a big problem for a foreseeable future. And I think the key message today is very clear to many organizations. If you don't start digitalization, you will run into big trouble in the future.
I think so. It's about digitization and then leveraging systems like TradeTrust, where that can be verified by other parties, so that you've got that confirmation of truth in the whole digitization process.
Because the way I see it, in the past, data is important, but it's not as significantly important as compared to if we were to really do a proper sustainability reporting or build a sustainability reporting infrastructure or ecosystem.
Yeah, because I think there is it's like as a fund manager, it's all about scalability as well. So you can only throw more humans at a problem to a certain extent, and then efficiency doesn't kick in. It becomes more and more inefficient. So in terms of sustainability reporting, etc., okay, you could throw hundreds of people at that, but then how long is it going to take to be able to report things in a timely fashion as well? So digitization, you can only do the sustainability reporting if you've also got the front end where you're doing the trading, where you're interacting with the real world is digitized as well, and you're getting that data in. Obviously, for quite some time, a lot of that will be using AI to pick out data from PDFs and stuff like that. But obviously, we're already starting to see more and more container vessels. We're integrated already to 60 shipping companies. In 2018, we only had one EBL provider, and we had a couple of ships who were on it. Now we have 5, 6 EBL providers, and also many container shipping lines creating their own systems as well, which also presented its issues. But I think we're starting to see now the beginnings of interoperability. So being able to, everyone's got different systems, but people are now starting to create the standards to be able to have interoperability between different systems. So it might be one shipping company issues their EBL, but someone's on another EBL system, but they can receive that one and then issue another one out through another system. But there is sort of connectivity there. So we're starting to see those issues addressed. So I'm very excited over the next 12, 24 months, we should, I think, see quite an exponential increase in the use of EBLs. Because I think it's been, the problems of adoption has been, obviously, lack of base law in countries around the acceptability of electronic records. So that kind of slowed things down. Everyone had to sign big central agreements and stuff, and that took a lot of lawyers and stuff, and not everyone's going to pay for the lawyers to do that. So also, again, it's no, that's going to cost us too much money to adopt. So that's also great. But then also the shipping companies, I think, after COVID, we saw logistic port operators, shipping companies, actually driving this digitization process, realizing this is a way for them to actually increase their margin as well.
Yeah.
And be able to also report the data they need to on their sustainability to the authorities, because now EU is the first one, but I'm sure others will start where if you come into our country or leave your country, what's your carbon footprint?
You also mentioned something that the market is beginning to see the importance of interoperability. And guess what? The irony is PDF is the most interoperable medium other than paper today. Really, because if I were to send you a PDF file, I can send you by any means, and I don't even have to care what software you use to open my PDF file. Same the other way around. So really, I think once, from my view, once the industry get more and more receptive towards the use of EBL, then interoperability will become a very important consideration when choosing any EBL solution. Otherwise, you'll be just bounded by trading with a limited group of counterparties that are encapsulated within a single closed system.
That's right. That's right. You're absolutely right. And I think glad to see that the container operators, container ship operators, are really adopting EBLs, improving their own margins, but also we're benefiting from their digitization. And I think in terms of, container freight is about 70% of world freight, so that's a big deal. But then, one of the headaches has with the bulk carriers, where we actually have to charter a single vessel for a single cargo of like 50, 60,000 tons. The problem there was that, the normal process is you go to a ship broker, you find out what is the best rate. Also, the ship has to be in the right place or close to where you need to pick up for the timing. And then suddenly you find that, the ship that has signed up to the EBL agreement is on the other side of the planet, and the one that is cheaper and close isn't on the EBL.
Yeah.
And so the shipping company hasn't signed up to that. I think we're seeing EBL providers speeding up the onboarding process for vessels, which is great. But that's also been a little bit of a slowdown issue. Sometimes it's just that you don't know always which ship is going to be presented as the best candidate for a particular voyage. And so that's also been a bit of a headache. So the fact this interoperability means that, those guys are on EBL provider A, the other, but we're on EBL provider C, but in the future, that's not going to matter. So that's also going to create this exponential effect.
Yeah. I think we have touched on many interesting points today, and I would like to really take this opportunity to thank you for spending your precious time with us.
Thank you very much indeed. It's been a pleasure.
To our audience, I hope you have enjoyed the series today, and we are actively looking out for feedbacks, and if there are any other topics of interest that you would like us to discuss more or deep dive into, do feel free to let us know.